Hi, everyone, and welcome back to Stefan Livera Podcast. Joining me again today is Andrew Poelstra, Director of Research over at Blockstream. Andrew, welcome back to the show.
Hey, Stefan. Great to be back.
So, Andrew, I know the team have recently launched Simplicity on Liquid, so going to chat a bit about that and what it means for Bitcoin development as well as Liquid. I suppose maybe I'll just try to quickly, for new people, just to explain a little bit about Liquid, I guess in my understanding, and you tell me where I'm getting anything wrong. But the idea with Liquid, I guess the technical term people would use is it is a federated sidechain, meaning on Bitcoin, people can peg coins or BTC into Liquid, and then they've got L-BTC, and then it's using a UTXO model, and people can send coins around inside of Liquid, and then they can peg out using a swap provider and so on. And the general idea is it offers different trade-offs to Bitcoin main chain. It doesn't have mining. It has signed blocks. It has 1-minute block times. It has confidential transactions. So see, these are some of the different trade-offs that Liquid has. And so there are different, let's say, wallets and providers in the ecosystem of Liquid. So that's how I would explain Liquid, just for somebody who's new. And then there are wallets, I guess, Blockstream, obviously, Blockstream app supports it. There are others like Aqua, Bull Bitcoin Wallet, maybe SideSwap and some of these others, and Bolts.exchange as a provider. Those are a few kind of off the top of my head as a bit of an overview on Liquid itself. And then do you want to elaborate a bit on that? And then we can get into what is Simplicity.
Yeah, for sure. That's a great summary of Liquid. It's a sidechain. It is, as a blockchain, it's a fork of Bitcoin. The client that we use, the validating node that we use, is called Elements Core. It's directly a fork of Bitcoin Core, where we've added a whole bunch of new stuff, as you said, confidential transactions, now Simplicity, new script opcodes prior to Simplicity, 1-minute blocks, multiple asset support, just a whole pile of a grab bag of things like that. And we have a peg, right? So you can move Bitcoin from Bitcoin onto Liquid. You can move Bitcoin off. As you mentioned, moving Bitcoin off of Liquid. To do this directly, there is a mechanism, but because that's reducing the balance of the sidechain, there's some additional signatures that are required. So the typical way that you would do it is by using a swap provider, who eventually, to rebalance their own books, will actually use the peg mechanism. But as a user, you probably just want to use a swap, right? Because that's going to be instant, and there are a few different ways that you can use that. So Liquid launched in 2018. Before that, we had kind of a Liquid test network or a preview called Elements Alpha. And Elements Alpha had a number of kind of neat technology things. It had covenant support through extra opcodes, and it had a version of SegWit that predates the version of SegWit in Bitcoin, which actually was, at the time that we developed it on Elements, it was pretty ugly. It would have been a hard forking change to put it into Bitcoin. And so from Elements, we developed the main idea of SegWit, and then a few people on the Bitcoin side, in particular Luke Dasher, figured out that there was a way to deploy SegWit where it would be a soft fork and where it could be deployed with much less kind of coordination and like a flag day and all sorts of problems that would come with a hard fork. And then Bitcoin launched SegWit, and then we took the Bitcoin version of SegWit, pulled it back into Elements, which is now Liquid, and now we have it on Liquid. So the point of that story is that Liquid's been around for, I guess, almost 7 years now, and has a long history of kind of this interplay between Liquid is a sidechain in its own right, but also it sometimes serves as kind of a platform for demonstrating potential improvements to Bitcoin.
Gotcha. Yeah, and as we were discussing, the main topic we're going to be talking about today is Simplicity. So can you give us just a kind of a brief overview? What is Simplicity for people who maybe aren't as familiar with some of these technical aspects?
Sure. Yeah. So Simplicity sits alongside Bitcoin script, or alongside TapScript, I should say, as a mechanism for people to attach scripts to their coins. So on Bitcoin, as many people are aware, there's a scripting system that exists. It typically is just used to validate signatures, but there are more advanced use cases that people do. Various multi-signature and time-locked backup keys and various constructions like this. And then also a couple more elaborate constructions that use hash preimages, and so things like HDLC, which build up the Lightning Network and stuff. And what maybe fewer people are aware of is that with Taproot, the scripting system was slightly tweaked in that in Taproot, you can have multiple scripts associated with a single output. And the top level script, if you will, is not actually even a script. It's just a key. It's just a signing key that you sign with. So the idea behind Taproot is that if you have some coins that maybe they're owned by you as an individual, maybe they're owned by multiple people, maybe there are multiple keys involved. But in all of those cases where ultimately there's some signers deciding whether to move the coins, they can come together and produce a signature, possibly interactively. They can produce a single signature for a single key. So the top level of a Taproot is always just like sign with a single key. And that key might be multiple people, even though it's one key. It's kind of a cool trick that the Schnorr signatures make able. But then embedded in that key, there's what's called a Merkle tree of different scripts. So there are all these different situations that you can encode where if for whatever reason you can't sign a script. So the classic example is in a Lightning channel where one party just drops offline or tries to publish an old version of the chain state. Or something like that, then obviously one of your parties is not cooperating, so they can't participate in a signature. So then you've got to go use Bitcoin script to say, well, okay, here are these alternate non-signature conditions that the blockchain is enforcing for you. And in Taproot, you can have as many of those as you want. You can fit millions of them in there. And each of these scripts uses a language called Bitcoin script, which supports checking signatures, it supports hash preimages, it supports time locks, it supports composing these in various ways, right? You can have an and or an or some thresholds, like 3 of 5 of these conditions kind of thing. And so simplicity sits in where script would be. So in a simplicity world, or on Liquid today, you can have a Taproot output where you have a Bitcoin script that can be used as an alternate and a simplicity script that can be used as an alternate, and they're sitting beside each other. So that's what simplicity is kind of an alternate script interpreter. And the benefits of simplicity over the existing script, which we'll probably dig into, are it's much more expressive. You can express any kind of computation that you might be able to do, and any pure computation that you can do in simplicity. This is not true of Bitcoin script. At least without like BitVM like tricks where you wind up using millions or billions of opcodes that you have to spread across multiple transactions and stuff to try to build up a computational engine out of the small arithmetic you can do in script. In addition to being able to do any pure computation, simplicity has full covenant support. And this is something that you simply cannot do in Bitcoin script, no matter how many clever tricks you use. Well, maybe you can use SHA collisions. All right, there are some clever tricks, but now we're going
these
beyond
are not very practical methods of
gotcha. We're into like tens of millions of dollars of specialty hardware to implement once kind of thing. So simplicity has full covenant support. In simplicity directly, you can access any part of the spending transaction, and you can do any arbitrary computation on that transaction. So expressivity is a big thing. And then the other big benefit is that simplicity is simple. And I mean that from an implementer's perspective. And that simplicity is defined by a set of 9 what we call combinators, which are these basic building blocks of a computation. And these combinators each of them is really just like one line, not even a line of mathematical notation to describe. I've actually got a t-shirt somewhere that I always forget to bring up before the podcast start, but you can fit the whole language onto a t-shirt and you can implement a simplicity interpreter off of this t-shirt. And the benefit of this is, for one thing, it's so simple that we can implement it in C on what we do in the actual blockchain implementation. We also implemented an interpreter in Rust. We implemented one in Haskell. And more importantly, we implemented one in the ROC theorem proving assistant. And the ROC implementation serves as a formal specification of the language. So not only can we write these multiple implementations and we know that they're all compatible with each other because this is so simple what they're doing, one of those implementations serves as a formal specification. And what you can do with that is either an implementer or a user is you can produce machine checkable proofs of correctness. or whatever sort of property that you might want your contract code to meet, you can produce a machine checkable proof. And in Bitcoin script, you've got none of these. The language is not very expressive. It has tremendous limitations on the size of numbers that you can manipulate. It doesn't have covenants. You can't reason about it because it's defined in terms of the C++ implementation. And in fact, it's so far away from being able to be reasoned about that you can't even re-implement it consistently. And there's been a long history of alternate implementations of script. They're not so popular today anymore, where people would try to implement Bitcoin script in Ruby or in Python or in these various languages. And always after some weeks or months or years, there would be some obscure behavior in Bitcoin script that somebody would notice that, as far as we can tell, nobody had ever noticed before. And the Bitcoin core implementation would behave differently in this obscure edge case than the Python or the Ruby one. And in fact, there was kind of a golden era in maybe 2014, 2015, when Coinbase was using Bitcoin Ruby as their way of validating Bitcoin scripts, and they had a bug bounty program. And whenever you found a divergence between Bitcoin Ruby and Bitcoin Core, they considered that a security bug, and they would pay you out $1,000, which at the time was 1 Bitcoin. So you could just get like free Bitcoins. I got 2 of these.
Lots of money.
But yeah, and I know a couple other people who got some of these. So sadly, they stopped using Bitcoin Ruby.
The golden days are gone. Yeah, but I guess bringing it back to this concept of the formal verification, what does that mean in practice? Like, are we saying that makes it easier to make it secure? Does it mean if you were to build other sort of off-chain computation, it's easier for the security proof of that contract or protocol? Can you elaborate, like, what would that mean for us in practice if you are a builder or a developer in Bitcoin or Liquid?
Yep. Yeah, it means all of those. So it means a fairly wide spectrum of things. So in the most kind of high-level, hand-waviest terms, right, it means that you can write a specification, a formal specification of what you expect your code to do and how you expect your code to behave. And you can write this in Rock, you could write it in Lean, you can write it in Alloy, there's all F-star, I think. There's all these kind of specification languages that exist that you can use. And specifications can be as detailed or as general as you want, right? So you could have, if you were like NASA or somebody, you could write a full specification of every single aspect of your program behavior, right down to like in every possible case, what will happen no matter how users interact with your code. And if you're writing a non-trivial contract, then producing such a specification would probably take like multiple full-time specification engineers, like many months or a long time to produce. And then once you have that specification, you can produce a machine checkable proof that your simplicity code, which actually runs on the blockchain in the simplicity interpreter, meets that specification. And because we have a formal spec of simplicity itself, you can produce such a proof end to end. So you have a specification of what your code does, you produce a machine checkable proof that your code matches that specification. And now whenever you update your code, whenever you add new optimizations, whenever you add new use cases or whatever, assuming that any changes in behavior correspond to updates in your specification, then you can reproduce your machine checkable proof. And that, by the way, even producing the proof is potentially a lot of quite difficult engineering work. But the point is that you can do this, right? Now, a specification can also be extremely general and extremely small, right? So one form of specification, you might say, is this code will always execute, and if it succeeds, then it will use less than 200 bytes of space in the transaction, okay? And that's a specification. It doesn't tell you a lot about what the code does, but on the other hand, it's very easy to write, and it gives you a pretty big guarantee that your code will not take, will not use more than 200 bytes on the blockchain, and that lets you do fee estimation, knowing that you have that bound on the size of your transaction. And you can imagine kind of there's a whole family of simple conditions that you might write like that. You might say, Maybe you're a countersigner. Maybe you're like BitGo or like the Blockstream app or one of these split custody things. And your specification might be, if this code succeeds, then it did so with a signature. And let me restate that. Without a signature from me, this code will not succeed. That's your specification. And you can do a formal proof of that. And for specifications like this, that are like these short one-liners that are a single conditioner, that's not months of work, right? That's something that that anybody who's kind of a little bit familiar with the tools for formal specifications and machine checkable proofs can produce. And actually, specifically for resource bounds, you don't even need to use these toolings. Simplicity has built in static bounds that we might talk about later. So you can bound the size of your program. But for something like the countersigner example, anybody who's a little bit familiar with using Alloy or Lean or Rock or whatever would be able to produce such a proof. And here you can kind of see the benefit, right? Where the benefit of having these machine checkable proofs, where your specification is very flexible. It allows all sorts of changes in behavior while still meeting the spec. And so you can imagine, if you're a countersigner, say, that your customer, your counterparty, is constantly updating their code and they're constantly tweaking stuff. And what you want as a countersigner is to know that no matter what crazy things they do, they are never going to take away your signature requirement, right? But conversely, you don't want to limit what they can do. You don't want to say, well, you're only allowed to do these 5 things that we've vetted are okay. So by having this specification, you can prove that, well, they give you a pile of code, you can produce a proof based on that code that it still meets whatever your requirements are. Where your requirements can be as detailed or general as you want.
This sounds more like maybe like an enterprise sort of higher security use, as I'm understanding you. And I guess I'm also curious, like maybe you can spell out a little bit around the uses of like what does Simplicity enable people to build? I know there was some talk online about vaults, maybe some covenants, and a ZK verifier. Can you just elaborate a bit on some of the different uses there? Like what can Simplicity enable that's difficult or impossible with Bitcoin script today?
Yep. As you said, to close up the specification discussion for now, this is large. This is for implementers of large contracts. This is for enterprise kind of stuff. So as an ordinary user who's got a key, maybe a couple of keys, you really don't need a formal specification for coins that have a couple of keys, right? Now, what does Simplicity enable? Beyond specification, right? The other pillar that I talked about is this new expressivity. And Simplicity, by dint of having full access to the transaction data, can do any sort of covenant implementation, and having full computational power, can implement basically any proposal that's been made for Bitcoin and beyond. So on we have online our website, simplicity-lang.org. We have what we call a web IDE, which is more of just a playground for writing Simplicity code in a high-level language called Simplicity HL. And in our web IDE, we have a couple example programs that include an implementation of opcat. We have an implementation of Sighash N8 prevout. We have an implementation of a vault. And there are a couple other things there, but these are all kind of big proposals for Bitcoin that people have, and all of them can be captured by Simplicity. And the cool thing here is that it's maybe unsurprising for your listeners to hear that we can do covenants and we can do vaults and rate limited coins and payment pools and all of these kind of covenant things that we've been talking about a lot. But it might be surprising to hear that we can do something like Sighash N8 prevout. So for context, Sighash APO, as it's called, is a proposal for Bitcoin that Lightning developers would like to have that allows you to produce a signed transaction, a signature on a transaction that's what's called rebindable. You can use the same signature on multiple transactions, subject to certain constraints. And the idea here is that in the case of Lightning, if you've got some payment channel that's being updated hundreds or thousands or tens of thousands of times, there's always the risk that a misbehaving counterparty there will try to publish an old state. And then when they do so, the honest party needs to publish kind of a response transaction, taking the old state and then pulling the coins back and undoing it, right? Because old states are supposed to be invalid. So we have this claim or refund mechanism where if anybody posts an old state, which will continue to be valid according to Bitcoin because of a property called monotonicity, you can't turn things make things become invalid. the old states will continue to be valid. So instead, you have this extra refund step where somebody has to post this. And ideally, your counterparty, each party could have a single signature that they've got laying around that they could use no matter which of the thousands of old states are published. They can grab their signature, they can put it onto the chain, and they can undo the bad transaction. Today, you need a separate signature for every single state update. And actually worse, because Lightning channels are two-party channels, you need a separate signature from both parties. And if one's misbehaving, he's not going to reproduce them after the fact. So as you're going, you have to get two signatures. Everybody has to get their own signature and their counterparty signatures. And every update, they get new signatures, which they've got to store. You've got this ever-growing chain of signatures you got to keep around. The Sighash any prevout would mean that rather than having this ever-growing chain of signatures, you just have one pair of signatures. And if your counterparty misbehaves, he publishes an old state, you grab the single signature, it's rebindable, so it will work for any state, no matter which old one that he published, and then you publish it. And the way that you implement this in simplicity is you grab all of the transaction data that you want to sign, which is the entire transaction, except for the specific input that you're signing. That's what any prevout means, is that you can put any input on the signature. You grab all of that data using the covenant mechanisms, you hash it all up, and then you check a signature on that hash. And by the way, you can do the same thing with opcat and opchecksig from stack, because it kind of gives you the same mechanism, build a sig hash and then sign it. You can do the same thing with px hash plus checksig from stack, which is the form of opctv, where you kind of split apart the signature from the transaction template generation. But you can't do it, for example, with CTV. I don't think you can do it with Vault. So you can't do it just with any sort of covenant implementation, because it's a little bit tricky. It's not just transaction introspection and transaction constraining you need, but you also need some way of having a signature on that transaction data. But in simplicity, you just it's there. All the tools are there, so we were able to implement it. And let me expand on that one more time before I hand back to you, which is that in simplicity, you can not only sign any transaction template, right? You can sign, like in the APO example, you're signing all the data except the input. Okay. You can also sign arbitrary functions of your transaction. And here's something that really no new opcode other than Rusty Russell's great script extension, which adds just everything. No kind of single small extension to script gets you. And as an example of this, you can define you can produce a signature which delegates to another lower security key, with the additional condition that the less secure key's signature is only valid if the transaction was in a certain fee rate range. So what you can do is you have this high security cold key, and it signs a transaction, but it signs a transaction only up to a point where it's still possible to modify the transaction. It's still possible to add new inputs and outputs, but the core transaction is signed. And furthermore, it signs the fact that the transaction's fee rate, and the fee rate, by the way, you compute the transaction's weight by adding up all the bytes in the transaction, and then you divide that by the total fee, which in Bitcoin is the total input amount minus the total output amount. So you do this computation on all of your transaction data, and you check, is it in a range? And you sign that bit, that it's in a range or not, and you sign the program that produces that bit. And now you have this transaction, you hand it off to your cell phone wallet or whatever, and that's able to sign off and publish it. And if the transaction turns out not to confirm because the fee rate was too low and the fee market spiked and you weren't expecting it or whatever, then your phone wallet, your low security key, is able to re-sign the transaction with a slightly higher fee rate. But we can do one better, right? We can even say the fee rate is a function of the age of the transaction. So in Bitcoin, we have something called relative time locks, which essentially allow you to gate certain logic in a script on how old the UTXOs you're spending are. So now you can say your high security key is going to sign a transaction with a tightly constrained fee rate that will become less and less tightly constrained as the transaction gets older. And this allows your phone wallet to bump the fee rate, but only if the original transaction is not being confirmed. So this is an example. And actually, Sankit Kandolkar implemented this, and he did a post on Delving Bitcoin describing how to do this in simplicity. So this is a kind of cool application that really you need the full expressivity of simplicity to implement something like this, right? And as far as I'm aware of the proposals that are on the table, right, for this, and right, I'm calling simplicity as a proposal, but as I'll say, it's not like we won't see simplicity on Bitcoin this decade, right? Like simplicity is a big change, and I'm sure we'll talk about that later. But of the proposals that could fit into Bitcoin, right, there is Rusty's great script restoration.
Great script restoration,
right?
Yep.
Which is certainly the closest thing to something that we could deploy like tomorrow if we had the will. There's simplicity, and then there's something called Chia Lisp, which came from Bram Cohen's Chia coin, I guess it's called, which is a variant of Lisp, which is designed for blockchain interaction. Although it doesn't have a formal specification, and there are a few important ways in which it differs from simplicity, but it's got a lot of the same motivations and some of the same development power behind it. And everything else, all the stuff that we're really talking about, like all these small improvements, like can we add opt-cat, can we add opt-vault, can we add opt-CTV, can we add these individual opcodes or Sighash modes, they don't get you this kind of full bore, you can do anything kind of functionality the way that simplicity does.
The lead sponsor of this show is Bold, the banking platform designed for Bitcoiners. With the Bold virtual Visa debit card, you earn Bitcoin back on every purchase. The more Bitcoin you buy with Bold, the more sats back you get on the card. Buy $2,500 of Bitcoin and earn 3% sats back. Keep stacking with Bold to earn up to 10% sats back. Bold offers the industry's lowest fees on Bitcoin buys and sells with zero added spreads. When starting out, you can use Bold Wallet, which is managed by the team, but Bold is also supporting self-custody with Bold Vault, a 2 of 3 collaborative custody multisig for zero monthly fees. With Bold, you get your own FDIC-insured checking account to store and send fiat, pay bills, direct deposit your paycheck, and replace your legacy fiat bank. Sign up today and get zero fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Go to getbold.io. This episode is brought to you by CoinKite, the makers of my favorite Bitcoin hardware wallet, the Cold Card Q. Now, some people think self-custody is too hard, but it's really about taking responsibility for your Bitcoin wealth and understanding that self-custody gives you a true feeling of liberty. The Cold Card Q has a full keyboard and big screen. It's got 2 secure elements and a true air gap, allowing you to go fully air-gapped using QR codes from seed generation to transaction signing. You can power the device using 3 AAA batteries, so you don't even have to plug it into the wall for power. You can easily use it with Sparrow Wallet for PC or Nunchuck on mobile, and you can dial it into the right level of security and complexity that you choose. If you want a simple setup, just use 12 words and single signature. If you want passphrases, easy. If you want to add multi-sig or co-signing features, you've got those too. So go to coinkite.com, use code Livera to get 10% off on your cold card or other devices and level up your self-custody today. Yeah, I see. So yeah, it comes down to, I guess, what you're saying around what is enabled, what's expanded here. So I guess putting this into like, what could you envision that might get built with simplicity, at least on Liquid? So things like, actually, I was curious to ask you this. I know Jonas Nick from your team has this idea called Shielded CSV. Could that be built using simplicity?
So Shielded CSV actually, I believe, works on Bitcoin. Shielded CSV does not. So let me do a brief digression into Shielded CSV. So Shielded CSV, the CSV here stands for client-side validation. And the premise behind client-side validation is that rather than having scripts that go on the chain and every blockchain validator checks that the script passes and that all the rules are being followed, in Shielded CSV, essentially all your blockchain is doing is checking that transactions are embedded in the chain in the order. All the blockchain is doing is enforcing an order, and possibly doing like balance checks and making sure transactions balance, but they don't even need to do that in full client-side validation. And the idea there is that as a user, when you receive a coin, you don't go to the blockchain, you don't go to your full node and say, is this a valid coin whose entire history followed all the rules? Instead, for that individual coin, from your sender, you receive a transcript of its whole history, and then you validate that before accepting the coin. And the transcript will make reference to the blockchain, but only as a proof of publication and an ordering mechanism, not as here are the scripts that are involved, and every blockchain validator checks that the scripts are passed. And this idea has been floating around since probably 2013, 14, or earlier. I remember Adam, like, really in the 2014, in the early days of Blockstream, Adam really wanted us to go at this, and I'm like, no, it's impossible. Like, that doesn't, like, come on, think about it, right? Because as a person receiving a coin, the history of that coin is massive, right? Like, that coin came from a transaction that had multiple inputs, and now all the inputs are themselves. You got to go back and check where they come from, and they expand. And then eventually that all grounds out in Coinbase outputs and like the blocks that originally created the coins. But very quickly, the history of every coin kind of expands until it's basically half the size of the original blockchain. And then, okay, why don't you just download the blockchain and validate it ahead of time, right? Like, what is CSV getting you? And the innovation of Shielded CSV and a couple other papers before it is that using updatable zero-knowledge proofs and some clever accumulation and aggregation techniques, it turns out that you can have an entire coin's history packed into a zero-knowledge proof that is just, I think, a couple hundred or a couple thousand bytes. It's a fixed size. It doesn't grow forever. It certainly doesn't grow to the size of of the whole chain. And that proof has to refer back to, I believe, the single most recent output on the chain. There's a little bit of blockchain validation you have to do, but what you're validating are not full transactions. What you're validating are outputs that just have a something like a 40 byte kind of marker or a commitment embedded in them. And so what's preventing Shielded CSV from being a real thing that we're using today is actually off-chain development work. Like, somebody's got to write a bunch of crypto code. Somebody's got to, like, there's a lot of like really difficult crypto work to be done, but it's actually all independent of Bitcoin. And I believe what you need from Bitcoin is just a platform to stick these commitments in. And we've already got op return outputs and some more clever things using taproot tweaks and signed to contract tweaks. So Shielded CSV does not need anything from the blockchain. It certainly doesn't need simplicity. Although Shielded CSV, as described in the paper, has no scripting ability. The premise behind Shielded CSV is that it's individuals sending coins to each other, like one key at a time. And ideally, and in theory, you could put a scripting system into Shielded CSV, and then your zero knowledge.
So it's like extending that idea further. I see.
Right, exactly. And then you could do simplicity inside of Shielded CSV, and then that's kind of cool because it's not happening on chain. It doesn't need consensus, and then you could do it. So that's when I think of simplicity in Shielded CSV. That's the direction that's exciting to me. Is maybe that's a mechanism.
Gotcha.
To get
I guess
simplicity.
bringing it back to I guess things that are like more kind of things that people are doing that now. Like, I've heard, I think I might have seen maybe on X some noise about ZK verifying being done inside Simplicity. Can you elaborate a bit on that and what's being enabled there?
Yeah. So and this is actually not Liquid specific, but it's been done on Liquid because that's where we have Simplicity. But because Simplicity can do any computation, in particular, it can verify zero knowledge proofs of any form. And so the folks at Starkware have put together a Stark verifier written in Simplicity that fits into a block. I think it even fits into a standard transaction, but right now their verifier is very large, and I'll talk about that in a sec. But you can take any Stark proof, which you might produce by writing some sort of code in Cairo, which is Starkware's high-level language for producing zero-knowledge proofs, and then you can verify those Starks on Liquid. So a lot of the kind of ZK rollups and other things that are being built in the Starkware ecosystem now can be deployed, pretty much just deployed on Liquid by producing zero-knowledge proofs that are validated on Simplicity. And this is very exciting by itself, for one thing, because as your listeners will notice, if they go to simplicitylang.org and go to our GitHub page and try to get started, right, they'll find that there's still quite a few rough edges. We're not as welcoming as we want to be, but the guys at Starkware apparently were undaunted, and they dug into our code and like unfinished branches and stuff, and they just implemented this, which is great. Super cool. One observation about the Stark verifier is, as I said, it's very large, right? And the reason for that is that simplicity itself is a very low-level language. You have to, if you're writing code in simplicity, you've kind of got to build up your computations from first principles. And to avoid every transaction being enormous, like every signature validation taking, like 1 million or 1 billion simplicity components that are all like inventing bits and then pasting bits together, we have a feature called jets, where for large common simplicity expressions, we have optimized C code that when the simplicity interpreter encounters one of these common expressions, or rather as a developer, when you have one of these expressions, you can just replace it with a jet. And here's another benefit of having a formal specification, is that we can write this jet code in verified C, which is a subset of the C language, which is supported by the CompCert C compiler. And the verified C has a formal specification, and the CompCert C compiler, which sadly is not open. You've got to pay to use it, but if you want to do this, maybe you should. You can compile your code, and the compiler has been verified, has been proven in a machine verifiable way to meet that specification, which means that we can prove that a jet for simplicity code is actually a drop-in replacement for the simplicity code that is replacing. Produce machine checkable proof that the C code and the simplicity code are exactly functionally equal, even though the simplicity code might take multiple hours to run and the C code takes tens of microseconds, right? Or nanoseconds. And as a specific example of this, we actually did this with the SHA-256 jet, where if you want to compute a SHA-256 hash in simplicity, you wouldn't write it out in simplicity, right? You would instead use a simplicity jet, which is specified in simplicity. And then rather than the interpreter executing that simplicity specification, it actually executes some C code. And in 2008 or so, some researchers developed a verified C implementation of SHA-256 and verified that it matches the mathematical description of SHA-256. So we got this chain of the platonic mathematical SHA-256 has been proven equivalent to the C code, which we proved equivalent to the simplicity specification, which means that you can swap those out. And so now rather than doing SHA-2 directly in simplicity, which would be very large and slow, you just do it in C. But we've got this chain of custody that shows that this new jet, this new kind of opcode, if you will, it hasn't changed the behavior. It doesn't have weird edge cases. It doesn't have surprising things where it turns out that it's not actually SHA-2. Like sometimes if you give it a funny input, it will output all zeros or something, which is the kind of thing that the C++ code tends to do. So anyway, we have jets for SHA-256. We have jets for verifying Schnorr signatures. We have jets for a whole bunch of arithmetic in bit sizes from I think 8 bits up to 256 bits. We have multiplication, division, modular arithmetic, Euclidean, the extended Euclid algorithm, which is used to implement modular inversion. We have a couple things for tweaking taproot keys and for manipulating SECP256 K1 points. So as a result, if you're trying to implement some novel crypto that uses libsecp, or that uses a SECP256 K1 curve, you can do it in efficiency, in simplicity, pretty damn efficiently. But if you're Starkware and you have a separate curve that you're using, and you're using these kind of custom 31-bit finite fields and these Merkle trees that use custom hash functions and stuff, you've got to basically implement all of that yourself using the arithmetic jets that we've provided. And when they did so, and prior to doing any optimization, which I think will be their focus and will be helping over the next several months, right? When they did so, the result was a very large program. So what this illustrates is that prior to simplicity, if you wanted to do something that just wasn't supported by the chain, it just wasn't supported. You can't do it. After simplicity, if you want to do something wild and like completely unsupported by the chain, you can do it, but it will probably be expensive. So if you're trying to do post-quantum signatures, if you're trying to do Stark verification, if you're trying to do pairing-based crypto, if you're trying to do like a RISC-V processor implementation, like whatever you can think of here, there's a chance that it's going to be pretty large. And so what we can do, is add more
jets. So just out
eventually.
Of curiosity, what would that mean then? Like in this example, are we saying being able to do this kind of ZK verification using simplicity? Would that mean like, I don't know, some of these zero knowledge like roll up things could, like you could have like, I mean, I guess Liquid is already a sidechain, but would you have like a roll up that is, having proofs posted to the Liquid blockchain, or what would be the idea there?
Yeah. So there are, so right now with these Stark verification proofs that are Stark verification programs that are extremely large. Yeah, I mean the only way you can use these in practice is by doing rollups, right? Where kind of off chain you've got thousands or tens of thousands of transactions that are all rolled up into a single Stark proof, and that's verified on Liquid. And you could indeed have basically a layer 2 on Liquid. If you think of Liquid as a layer 2 of Bitcoin, then now you've got like a layer 2 of a layer 2. I forget if we call those L3s or if that means something else. But that's one thing you would see. But also because the Stark proofs are very general and have kind of already been designed to the extent possible to be blockchain agnostic, you can use this to produce bridges and stuff. You can do atomic swaps inside of the Stark rollups where you are directly transacting in a way where you're manipulating both Bitcoin on Liquid and Bitcoin or whatever on Ethereum or whatever other kind of assets these different chains support, and across all sorts of chains. So there would be essentially the existing Stark rollup ecosystem. Liquid kind of gets to join for free because even though at Blockstream and on Liquid, these ecosystems are not really a focus that we're looking at, simplicity is expressive enough that those ecosystems through Starkware are able to extend themselves to now support Liquid, right? And that they get these rollups, and they didn't need to petition us for a Stark verifier and like convince us to hire a cryptographer to spend a year reviewing all of their code and like deciding whether Starks are really the zero knowledge proofs that we want, or maybe we want to wait for Starks 2, or maybe we want to like use zkBoo or one of these other things that are floating around. None of that. They just implemented in simplicity. And then once they have the simplicity code is working, we can look at that and say, well, how widely used is this, and how general can we break up their Stark verifier into general components that we could jet out? And then with our assistance, we can make their code much cheaper and more efficient on Liquid, again, without us having to implement a whole Stark verifier on Liquid and like have that tied into our consensus logic and stuff. We can kind of build it up by jetting out larger and larger computations, and computations that we feel are very generally widely used, right? So we have a lot of flexibility in how we move forward.
Okay, and now if we talk through, let's say, some of the vault or maybe this kind of coin pool sort of idea, as I understand, some of the covenant techniques could be applied to do that. So I guess I'm trying to imagine, like as an example, even some of these decentralized exchanges, or maybe not decentralized, but just like, Bull Bitcoin or some of these swap providers, maybe they could do a lot of batching of their payouts to the customers using some of these kind of coin pool or shared vault kind of ideas that are possible now in simplicity, right?
Yep, absolutely. So there's kind of two pieces of technology that simplicity makes possible is valuable for them. So one is, as you say, these payment pools, or shared vaults, or however, there's a few different kind of similar ideas where the payment processor, the swap provider, produces a single output that represents coins for hundreds or thousands or millions, but whatever, of withdrawals, and it's a single output, which means that the swap provider can attach a relatively very high fee to that and get a very high priority transaction.
So it's like very high efficiency on chain.
Yeah. And then individual participants would then create a new transaction which effectively withdraws from the shared output and puts back all of the old coins. And the trick there is that each participant can choose their own fee rate. So every individual is paying for their own transaction, right? So now that the incentives are aligned properly. And so users who want their withdrawal right now can just sign a very high fee rate one, and users who are not in any particular rush can sign a very low fee rate transaction. And everybody, kind of the money is coming from the people who are incentivized to move the money. So that's a big thing, right? That's definitely an application of vaults that improves incentives and should improve the overall efficiency of the market, which is a little ironic, right? Because it's obviously increased the total amount of stuff that hits the blockchain if you've got multiple transactions, or previously you had one. But because the transaction structure is more economically efficient, it works out better for participants in the network. Then the other piece, which particularly for swap providers and decentralized exchanges and stuff, is that simplicity allows you to do on-chain orders. So right now, in order to be a swap provider, or in order to execute a cross-chain swap, or even a single-chain swap, essentially what you need is every single participant in that swap needs to sign a single transaction which executes the swap atomically, right? So if you have, this is, by the way, why custodial exchanges are so fast, so much faster and so much cheaper, right? Is that there you don't have multiple participants who have to come together on a single transaction. But the fact that you need all these multiple participants to sign the same transaction is, well, for one thing, it's a little bit expensive. It's also quite inflexible, in that everybody has to agree on exactly the transaction. You can't have one participant who says, you know what, I'm willing to sign like any price within this range, like just whatever, guys. So just, you guys figure it out. Here's my signature. They've all got to coordinate and agree on, like, down to the last Satoshi, what's the transaction they're signing. If anything changes, including a change in the participants, then everybody has to re-sign. So this is really the big user cost, is that in order to participate in one of these decentralized exchanges or one of these swap protocols, you need to have hotkeys, right? You've got to have your phone wallet or something that's always online, constantly re-signing these completed transaction orders. And using existing script capabilities, it's very hard to make this flexible, right? You can do these sort of, like, you can sign half a transaction and let somebody else sign the other half, but you've still got to define the exact parameters down to the last Satoshi of what that transaction looks like, right? Whereas with simplicity, you can do a limit order, say, where you can say, here are some wrapped USDs. I am going to put these up, and anybody can take the USDs as long as they give me at least X amount of Bitcoin, where X corresponds to a Bitcoin price of like 120K or higher. I think that as we're recording this, I think we just hit an all-time high, by the way.
Oh, fantastic.
And I think so. I don't have it. All right, I won't get to
yeah, I think it's like 120K. Anyway, yeah. So anyway, we're talking about the decentralized exchange case and re-signing.
So you can describe these conditions, right? So here are my coins, right? Here are my dollars, or here are my Bitcoin. Here's what I'm willing to trade it for, and here's a range of prices that I'll accept. And anybody can take my side of the trade. They're allowed to accept, any amount of it from 0 up to the full amount, as long as the price that they give me is within the acceptable range, if it meets the threshold. And that actually, and this is like such a basic piece of functionality, like in traditional markets, like you can do a limit order, right? That's like often like the only kind of order that you can do. It's such a basic piece of functionality that people miss, that actually is kind of an interesting algorithmic thing, where you're telling your brokerage, or you're telling your exchange, or you're telling your DeFi software, this is kind of an open-ended set of conditions under which I am willing to execute any specific trade that meets these general conditions. And some brokerages offer like completely open-ended, like algorithmic trading. Many brokerages offer trading APIs. So you write your own algorithm and run it on your own computer, and then it executes trades based on what your algorithm does. If you're some sort of like, billionaire, like if you are a brokerage, then you can often execute algorithms on the exchange's computers directly, and that's kind of cool because they can do matching extremely quickly. And what simplicity gets you, like EVM or like these other kind of full Turing complete, rich statefulness kind of blockchains. Simplicity lets you do arbitrary things. It lets you do limit orders. It lets you do arbitrary algorithmic trades. It lets you build financial products. So something weirdly similar to a limit order is a fully collateralized option, or a stock option, which is a financial contract where you basically bundle up a trade. You say, I'm willing to sell Bitcoin at this price at this date, and then you just throw the trade up, and the trade you can trade the trade, right? Like the trade is bundled up into this contract called an option, and then that has a market price, and people who want to be on either side of that trade can buy or sell that. And so you can get a bit of money up front as a premium for basically selling your trade into the market. And this is basically just like a limit order that you bundle up and let that trade around. And that's the kind of thing that you can implement directly on chain or within a roll up or whatever extra layer you want using simplicity. So that I would expect we're going to also see some new financial products that are built and implemented using this.
So more like in the DEX world, and cross-chain swapping, and maybe liquid assets, this kind of thing. Like I know, well, Adam from Blockstream, I know he's obviously very big on Bitcoin treasury companies, and he's also very big on Stocker and L-BTC trading against those Bitcoin treasury companies as well. So I know he's super into that. And so maybe we see some more something in that direction also. Also, just curious to get your thoughts on, I guess, what direction do you see the main liquid uses being? Like, as I see it, it seems like you've got this capital markets use, like which we were talking about, like trading, let's say, liquid Bitcoin for CMSTR, which is like the tokenized form of strategy or something like that, or the other treasury companies. And then I guess the other big one I've seen is a lot of people using, as an example, Breeze SDK nodeless, which is like using, like having a liquid Bitcoin based wallet, but using it for like swaps in and out of Lightning, using Bolts.exchange as like a transactional wallet. And also maybe in some cases like Aqua, where you've got like liquid Bitcoin, but that user can easily rotate in and out of liquid Tether or the various Tether forms. So I'm curious, where do you see the main uses for liquid, I guess, nowadays or into the future? If you could elaborate on that.
Yeah. So as from my position as director of Blockstream research, right? Like I like to pretend that Liquid is a technology kind of demo platform, or even especially a platform for demoing things that I would like to see in Bitcoin one day. But the truth is, Liquid is very different from Bitcoin in a couple important aspects. So one is that we can deploy. One is that we assign blocks, and we have a federated trust model and stuff, which is a huge difference. Another way is that Liquid, because of its nature as a sidechain that is not trying to be as broadly usable as Bitcoin itself, we can demand a much higher hardware requirements from people who are validating the chain. And this lets us do things like confidential transactions and throw all this really heavy crypto onto the chain. But then the big way that we differ from Bitcoin, where Bitcoin will never follow, right, is that we have multiple asset support on Liquid, right? So Liquid as a blockchain allows you to issue new assets. Once you've issued an asset, alongside that, you can issue or not what we call reissuance tokens, which are NFTs that allow you to reissue more of that asset. So you might do like a closed issuance where you issue it, there are no reissuance tokens, and everyone can see forever that there's a fixed supply. Or you might have reissuance tokens that are held by, like if for example, Tether has a reissuance token that is held by the Tether Corporation, right? So they're able to issue new Tethers onto Liquid. And we have built into confidential transactions, we have what we used to call confidential assets, where we hide not only the input and output amounts, the way that the CT works, the way it would work on Bitcoin, the way it works on Monero, and so forth. But we also hide the individual assets. So you can have transactions that have multiple assets going in, multiple assets going out. And so this gives us a platform where, beyond being kind of a place to demonstrate new Bitcoin technology components, is actually a very different ecosystem that has multiple assets, many of which are wrapped assets from other blockchains, and many of which are freshly issued assets that are tokenized forms of other financial products, including, by the way, Blockstream's mining node, the BMN. is one of the earliest kind of, I would say, interesting financial products that was floating around on Liquid. And so what Liquid as a platform gets you for these kind of tokenization and trading use cases, well, one I hinted at, right, is that we have supply controls that are very easy to reason about, right? When you issue an asset, that's public. Okay, you can actually do confidential issuances. I don't know if anyone's doing confidential issuances or why you would, but it was easy for us to support, so you can do it. But typically you do an issuance in the clear, so everyone can see the total amount that you're issuing. You can see how many reissuance tokens exist, if any, right? And that's a big important piece of information. And so now you know the total supply of every asset on Liquid. Up to, I guess, anybody can burn coins confident. You could have like a confidential op return output, I suppose. So you could secretly reduce the supply, but nobody can inflate the supply except by the parameters that are publicly visible. Beyond that, we also have ways that people can have visibility into and control over how their assets are traded. So we have various classes of assets that use what we call AMP, the asset management platform on top of Liquid, which allows users who are trying to issue assets where, for whatever reason, they only want like a whitelisted set of traders to interact with those assets.
Yeah.
And
it sounds to me mainly like
right.
you're speaking about asset issuance on Liquid, right? That's kind of the direction you see things going.
Yep. And it's asset issuance.
Yep.
That is transparent in a way that it is not on other blockchain platforms. And simplicity is kind of part of that, right? So it's adding arbitrary functionality to these asset issuances in a way where everything is publicly verifiable. And everything is, to the extent people are willing to do the work to make the proofs, right? Everything can be proven in a machine checkable way. That's really the goal here, that people can have rock solid.
Okay. One other topic that I think it's kind of topical just because the last few days there's been a bit of chatter about this around what some of the stablecoins are doing, right? That they are now, a bunch of them, I think Tether, Circle, and one or two others have basically come out saying, hey, we're going to do our own chain. We're going to do our own L1 token. And I think, there's been a lot of back and forth on this, but I'm curious to get your thought on this about, what it means for Bitcoin and Liquid, if anything.
Yep. I'm a Bitcoiner at heart. I've never used a stable coin. I wasn't aware of this announcement. This does surprise me a little bit. So I would like to understand more about what they would get from having their own chain versus having an existing multi-asset chain like Liquid or Ethereum.
My speculation, I don't know for sure. My speculation would be maybe there's more compliance checking. So maybe it's kind of like the US government is sort of saying, I'm speculating, right? I don't have inside info, but this is my guess. My guess is it's kind of like a US government is sort of bringing them in the fold and saying, hey, you can have a seat at the table, but we want more compliance checking, or we want a bit more on their side. Maybe they want like AML and sanctions to quote unquote stop the terrorists and whatever, or to stop the sanctioned whatever individuals. Maybe that's, I don't know. Of course, stablecoins right now are also surveilled. That is a standard thing that people should be aware of. They do not have the same censorship resistant qualities, obviously, that Bitcoin has. But that's my guess. But I also think it kind of, this idea that the stablecoin issuers are putting out their own chains themselves, maybe it undermines this quote unquote so-called utility token thesis that some people spoke about, that, of some of the altcoin chains, things like Tron and Ethereum and whatever else, Solana, whatever. So that was my interpretation of it, in favor of Bitcoin, because obviously there's a reason to hold Bitcoin, right? There's no more than 21 million. We see it as the future of money, all these typical things. Whereas I think this utility token thing has always been a bit of a bunk idea. And now it seems like, I guess what I'm driving at, and I think this is not unique to me, just a common Bitcoiner argument, is this idea that there's going to be this kind of centralization fact or kind of force, because these things were not decentralized anyway. Like no one cared. No one was pretending that stablecoins are a decentralized thing if they are issued by a known individual with like backing by whatever US government bonds and whatever else. So maybe there's kind of a centralization, force there. That now, of course, Bitcoin is in a unique category, but I'm curious, do you have any reactions or thoughts on that?
Yeah. So I'm certain that within Blockstream, our business development people are looking at this and like trying to figure out what problem they think they solve by going onto their own blockchain is. And for me personally, I hope that I don't get pulled into those phone calls. But
it sounds like, at least for now, it doesn't sound like they're taking away support from other chains.
Right, okay.
But it's just like, is this the direction they're going to move? I mean, none of us knows, right?
So,
We're kind of speculating.
the big reason to have these kind of mega chains that support all of these different tokens, right, is that it makes the swaps very easy, right? It makes it very easy to do DeFi-like things because you can have a single transaction on a single chain that executes whatever sort of trade under whatever conditions people want to enforce. And as soon as you've got independent blockchains, then you're doing cross-chain swaps, which are certainly possible, but they're harder, right? They're slower, they're more difficult to implement, and they have these weird like timing issues. Like there's this kind of free option problem where somebody can wait to the last second they're allowed to sign and then sign or not. And yeah, it's so for something like a utility token, like almost the whole point is that you can trade it, right? Like I'm not sure what other purpose many of these things have other than being tradable, or like maybe like what purpose these things have to be on a blockchain other than it makes the trading more efficient, right?
Yeah, because otherwise, I mean, at a certain level, it's like you might as well just have a SQL database or something, not even have a chain,
Yeah, exactly, right? So, I've got the same impression
maybe it's
as
a
you.
bit of an open question. None of us really knows. We're just kind of speculating a bit just to understand what's going on. Now, different arguments I've seen kind of online. Some people are saying, okay, but actually the real reason is so-called composability, right, between this chain or the other. Or maybe the other argument I've seen is like, well, hang on, actually some of these issuers might like the kind of idea of having a bit of a, we don't control the chain. So they can sort of go, oh, look, Mr. Regulator, I don't control the chain. What's happening on whatever coin or chain, that's out of my control. So maybe there's a bit of that kind of regulatory, let's say, arbitrage or something for that reason. I don't know. I guess one other thing I'm curious to get your thought on while we're talking about Liquid, how are you seeing this evolution now of Liquid as compared with different L2s on Bitcoin, right? Because we've got obviously Lightning, the most decentralized and arguably the most adopted L2 for Bitcoin. And then now we're seeing Arc and we're seeing Spark. We've got Liquid. There's things like eCash. I guess it depends how you count these things. But where do you see Liquid contrasted with those? Like, are we seeing it, or at least are you seeing Liquid more in the, let's say, the capital markets, asset issuance space there? How do you see Liquid comparing?
Yeah. So in short, yes. So by Liquid being a public blockchain, in some sense, it's just not a scaling solution. So if you consider an L2 to be something on top of Bitcoin that allows Bitcoin to scale better, Liquid's sort of not that. I mean, it sort of is in that the set of Liquid validators,
like the swap providers,
smaller,
the Bolster exchange, and this kind of thing.
Yeah. So like as a Bitcoin user who like doesn't want to validate the Bitcoin chain and is willing to like trust it briefly, right? You could swap into Liquid and then do a bunch of transactions that are trusted in the sense that you're not validating it, and then swap back, and then you've kind of limited your exposure. You're of course welcome to run a Liquid node and then validate all the transactions, but then at that point you haven't gained anything in terms of scalability, right? Now you're running two nodes and validating every transaction. So no. So, but you can compare that to something like Lightning, where the premise behind Lightning is that you've got a sequence of two-party payment channels, and all of the updates are happening in these two-party payment channels that only those two participants need to validate until the channel gets closed out, right? And then that is a real scaling improvement in that you haven't reduced your trust model in any way. You still have the full backing of the Bitcoin chain and it's public blockchain, although you're not, except in the uncooperative case, you're not falling back on that. But you greatly improve improves scalability because each transaction, every transaction except the final one, is only verified by the two participants in the channel, right? They sign it, they verify, okay, it's good. They do another update, they throw it away and sign a new one, right? And then that one that they threw away doesn't have to be published, it doesn't have to be verified by everybody, and that's a meaningful scaling improvement, right? And then like Arc is similar. It's in many ways like Lightning. It has a different topology of how channel closures work, which should be more resilient to like some catastrophic everybody trying to exit at once kind of construction, and which I think has more room to be improved by covenants. So I've never really thought of Liquid as a scaling solution for Bitcoin as far as its relationship to Bitcoin. Right, I think it works nicely as a place to prototype some functionality, at least where that functionality doesn't depend on or get interfered with by the multi-asset support too much, right?
The testing ground, let's say.
Yeah, it's a testing ground, I should say, right? It's not. I really don't want to pretend like
you have testnets and Signet and so on.
Yeah. I mean, Liquid's very different from Bitcoin, and lots of Bitcoiners really don't like Liquid, so I don't want to pretend like it's sanctioned or by the Bitcoin community in any sense. But it is a very similarly shaped blockchain that we've got a number of Bitcoin developers working on who are able to kind of get stuff deployed on fairly quickly and with less coordination than on Bitcoin. So as I see these L2s evolving on Bitcoin, I think that's awesome. Obviously, that's great for Bitcoin. And then I maybe keep half an eye on like, do we want those L2s on top of Liquid, right? Like I think of Liquid as a separate L1 beside it, and like his use cases are not. Liquid is not competing with other L2s, right? If anything, Liquid could just like copy those L2s, and we could use the same L2s on Liquid if we ran out of space in our 4 meg every minute blocks. Right?
I know some people talking about, you could theoretically run Lightning on top of Liquid, right? And so you could do kind of various ideas. But I guess one thing definitely I noticed was Liquid did get a bit more adoption during the fee spike of the the retardinals or ordinals era. So that was something we saw a lot. We saw a lot more people using it for this kind of swap, like Aqua Wallet or this kind of Bolts.exchange, Breeze SDK sort of use case. There's another wallet called Stash. I think it's Stash Pay. But anyway, the point is there are people who are using this as like a kind of a cheap transactional chain, let's say. Ironically, kind of like the Bcasher transactional chain, which is ironic given the way historically things played out. But it sounds to me like your focus is maybe, it's a testing ground, and also this asset issuance, capital markets seem to be more like the likely use cases of Liquid, let's say. So I guess any closing thoughts? What should people think about? What are you looking for in terms of, I guess, feedback or developers to go have a look at Simplicity?
Yeah. So we launched Simplicity probably when this was published close to 2 weeks ago, and it's live on Liquid. We are working. We have a website, simplicity-hl.org, and we are frantically working to write readmes and contributing documents and welcome pages and documentation and all this to bring people in. We have one job opening, probably we'll have a few more soon, for a developer advocate, which is somebody who wants to play with our web IDE, wants to put together presentations, wants to work on this documentation, really just even identifying missing documentation and letting the rest of us know that's super helpful. Improving our error messages in our compiler, improving all these kind of user-facing things and understanding what people are trying to do with Simplicity and where the pain points are. So we've got a job opening for that, which you can find at blockstream.com/careers, and keep an eye on that page for more things. And I'll probably close with that, simplicity-lang.org. And hey, hopefully I'll be back in 6 months and we'll be able to talk about how we have Simplicity on Signet or on MutinyNet or something, but we're not there yet. So where I'll close today is Simplicity on Liquid. It's live today, simplicity-lang.org. So thanks.
Fantastic. All right. Well, thank you for joining me, Andrew.
Yeah, thanks.